Good morning and welcome to the latest installment of SFI Live with me, your host, Jay Evans. I am joined today by our typical and everyday Tony Hall. We've got two new faces this time, Sophie and Phil. I'll let them introduce themselves in just a moment. Sorry about the mess up with regards to British summertime. Hopefully, well, you've all got the links. Hopefully some more people will join us shortly. If you'd like to put a question to anyone on the panel, there is a chat box. Feel free to put your questions in there. Direct it at a specific person if you want to. And please pop your name just so we know who you are. So that's the chat box on the right. We'll get to the questions as soon as we can. We have got some questions in the meantime. We're here to talk today about self-employed and contractor mortgages, something that's being a widely discussed topic since the pandemic took hold. We're hoping today to answer as many questions as we can. In the meantime, for now, let's do some introductions. So, Tony, why don't you introduce yourself to the viewers, please?
Thanks, Jay. Morning, everybody. My name's Tony Hall. I'm the interim head of mortgage sales at Saffron. I've been with Saffron since July of last year. My role encompasses really driving the profitable growth of our mortgage book, but it also looks after ensuring that our existing customers are properly serviced, as well as in helping out with people looking for mortgages via Saffron Mortgage Finders, our whole of market brokerage.
Lovely. And that's some new faces. So we're going to you first, Sophie. Sophie, why don't you introduce yourself?
Hello, good morning. I'm Sophie. I'm one of the BDMs here at Saffron. I've been in the BDM team since September 2019, but I've been with the Saffron since June 2017.
Lovely. Welcome. And Phil, introduce yourself, please.
Yeah, I'm Phil Lawford, BDM for the Saffron for just over a month, but over 20 years experience in the intermediary industry as a BDM and 30 years plus in the financial services market.
We've got a veteran in today. It's good to see.
Polite way of saying I'm quite old.
Guys, welcome both of you. So we'll make this as smooth as we can for you today. So guys, if you have any questions for the group, please do pop them in the chat box and we'll get to them as quickly as we can. We will be doing a brief criteria clinic at the end as well, so we can go outside of these products. So today we're here to talk about self-employed and contractor mortgages. So this year hasn't been a typical year for any of us. Most of us have seen difficulties, and none more so, I suppose, than the self-employed. Certainly at the start of last year when the pandemic set off, there were a lot of self-employed that didn't get any help from the government. That's slightly changed in the last budget, but that has also affected how they can apply for their mortgages. So let's talk specifically at the moment about the self-employed and contractor mortgages you have at Saffron. So I'm coming to you first, Sophie, throw a newbie in straight away. Can you tell us a little bit about the self-employed and contractor mortgages that you offer as specialist mortgages, please?
Yeah, so with self-employed, generally we want to see at least 3 years of accounts for an applicant. However, we do have a specific product range that allows just 1 year of accounts. So you can consider self-employed just 1 year accounts. We also have a specific product range for contractors as well. However, employed and salaried fixed term contractors might be able to be considered on our standard residential range as well.
Brilliant stuff. I presume when you're dealing with a self-employed or a contractor, non-contractor, there's a little bit extra paperwork, there's a little bit more consideration with regards to what to put forward in application. Can you sort of talk about a little bit about what that is and what you'll need?
Yeah, sure. So it does really depend on the type of self-employed or contractor that somebody is, because there can be quite a few variants. It's generally SA 302s or accounts and business bank statements for self-employed applicants, and payslips or invoices, and often also the contract itself too for contractors.
Phil, let's try this one at you, just because you're new to Saffron, so I think you can answer it. How is the application process at Saffron different compared to other lenders that you've worked at with or you know about? So is there anything about Saffron that stands out?
Yeah, I actually think it's our approach to lending rather than our process that's different and stands out, in that we don't have a one-size-fits-all policy, and that particularly works well for self-employed applicants. So we've got experienced underwriters who understand self-employed lending, so we can be pragmatic in our decision making. So I hope that means that if a case makes sense to the broker, it will make sense to us as a lender.
We concentrate on the broker audience at the moment. They're all here. They may, some may never have put an application for self-employed before. So can we give them a little bit of guidance as to the process and how they can make that application more successful?
Yeah, I'm happy to do that. So essentially, when it comes to submitting applications and that kind of thing, it's simple things that will really be helpful in terms of sort of uploading documents with clear titles, so it's easy to see what each thing is, and also preempting things we might ask about, especially with the pandemic. Lots of people have got very different situations that they've gone through and circumstances, so just sort of making use of the notes section that we have available, even at decision in principle stage. And it goes back to just telling that story about the applicant's situation and providing us with as much information as possible. And as Phil said, we do try and take a pragmatic approach. So if you provide us with information as to what their situation is and explanations around things, then it's more likely that we can actually take a common sense approach to the lending decision.
Brilliant. You just touched on the pandemic. There has been some assistance. There are some questions we've had previously, and I want to bring that up today. In that, if somebody is self-employed and they've taken a bounce back loan, is that going to go against them in the application process?
I'm happy to take this. No, it isn't. Clearly, a bounce back loan can be an indication of financial stress, but we never automatically dismiss an application because of this. A recently good example is when an applicant took advantage of a bounce back loan as a contingency measure, but they didn't really use it. They had the means to repay it back and continue to trade. So that made sense to us. So why would we penalise them? So it is all about the individual circumstances of the case, and that's what I've found new into the Saffron of very much more about it. It's it is common sense. If it makes sense, then tell us that and tell us why. As Sophie says, use the notes to tell us, and hopefully you'll get a favourable outcome for your clients.
Tony, that's very much a Saffron ethos, isn't it? This common sense approach to lending. I think we've discussed it many times before. That's where I think you really stand out compared to other lenders, isn't it?
Yeah, I mean, it's interesting because a lot of people, lenders have made changes to policy and procedure during the pandemic, to meet the flexing demands and challenges of the market. And we get asked it all the time. And the reality is we haven't changed anything because we haven't had to, because we've always had this open-minded, common sense approach. As Phil said, if the case makes sense to you, and it should make sense to us. Now, the challenge is, it might make sense to you in your head, but if you don't write it down and explain it to us, it's probably not going to make sense to us. So that's why it's about using the notes functionality, getting hold of the BDM team, or whatever you need to do, because we want to help, and we want to do it as fast as we can. So help us do that. I think that's the key. But the key thing is about us is we use, we've got an online slick system. So we use technology to get it to a human to make the decision. And that's where the common sense comes in. We do say no to stuff that we definitely will never do. And then we'll do that automatically because we don't want to waste someone's time. But if it's got any legs at all, then we want to look at it. We want to explore it. To the point, sorry, Jay, where actually, if it does make sense to us, but through the complexity of the case, we need a little bit more comfort in terms of pricing or fees to take on the risk, we can bespoke price products.
This is what I was about to ask you. And it's also, you're ahead of me. The next point on from that is something that Phil and I discussed earlier in the week, or last week actually, was about what you're submitting. So obviously you're asking for accounts. We're also asking for bank statements from the business and bank statements from the person themselves, the applicant. So it's important to keep, I'm using your phrase, Phil, to keep your nose clean. So just explain what we were talking about, Phil, with regards to the 3 months of account bank statements and what could affect decisions.
Yeah, I mean, the most recent 3 months bank statements give us the comfort around the position that they're in at the present, the here and now. So the healthier that looks, the better chance the application's got of succeeding. So, you know, again, another tip is if the bank statements show any anomalies, any unusual transactions, then it's a really good idea to query that with your clients, and then add a note and tell us what's happening. Because of if you spot something as their advisor looking at the bank statements, you think that looks a bit odd, then I would bet my salary that our underwriters will spot it as well. So just head it off, tell us, use the notes. We're probably going to use that phrase a lot, but it's a great tool with manual underwriting. So make it tell us a story so we can understand it, so it makes sense. And you know, that should also reduce some of the touch points in the application process as well.
Well, I think it's really important, isn't it? We were discussing last week about, you know, it is all about as much information as possible. I think people are reluctant when they're filling out the online form as opposed to talking to a person. You've got to almost write what you would say to them. If you were selling your case to an underwriter, you've got to
exactly.
do it in that form,
yeah.
Is there any tips on what to put in there? Obviously, we've talked about the potential that they've taken a bounce back loan and not used it as a bit of backup. We talked about the bank statement. Is there anything else that can really stand out? Is references, anybody that they can get comment from that would help the application?
Yeah, so a qualified accountant is always very helpful. Obviously, it's one thing hearing it from the client and then the broker, but if they're able to get an accountant's reference or projection, even just to sort of say how they are getting on from a qualified accountant who is looking at the books for them, that will also give the case in good stead as well. And yeah, it really is just about preempting things that you pick up on. As Phil said, if you pick up on them, preempt the fact that we will too, and then get in there before we ask, just to try and save time and make the whole thing go smoother. But it's not just that. You know, obviously the pandemic has meant lots of people have gone through different struggles, but even just your everyday things in life. You know, if somebody is employed and they have a child, they'll have maternity leave. If they're self-employed, they will often give themselves some time off, but that doesn't go down as maternity leave anywhere. So if that's the case and they've had maybe, I don't know, 3 or 6 months out of a year, and therefore that year is a lot less, well, tell us the fact that they had less income was because they took time out because they'd had a young child. And then we think, oh, okay, very valid reason, that makes sense. And it saves us asking further down the line, what's this gap of 6 months where there's no income coming in? So yeah, anything like that, any kind of life changes as well that cause things like that, do let us know, because it's always helpful to get a better picture.
Yeah, I think the thing is we're good, but we're not mind readers.
Yes.
No, we haven't developed that skill just yet. It's in planning. It's coming, but we're not quite there yet. So point it out. I think the other thing I'll quickly make, the best tip is package the case fully.
Yeah.
You know, so rather than just sending in one document at a time, you know, it's better off you holding on to them all until you've fully packaged the case. You've looked at it all and gone, actually, there's nothing in here that's looking odd. Right, I'm ready to submit. That just helps us hopefully look at it once and move it through.
We didn't talk about a specific scenario. So, Sophie, in your last comment, you said about life change. It's the biggest life change for all of us has been the pandemic. But there are businesses that have done very clever things. I'll use, she's going to kill me for this. So my sister is an example. She owns hairdressers and beauty salons. Obviously, they weren't allowed to open, but she's also qualified in nutrition. She was actually using her other skills to do it. But obviously, it saw a bit of a reduction in what was coming through the books as opposed to when she had salons open. But she has consistently kept in touch and kept contact with those contacts. And actually, when she reopened last week, or this week, sorry, she hasn't had a gap in her schedule to cut any more hair because she's been in constant contact. I presume that's something we need to tell us a bit of a story to say, you know what, they're dynamic enough to diversify. Again, that's just part of the story, isn't it?
Yeah, absolutely, it is. So please tell us. Sometimes people have a business, but they'll have two businesses, or they'll have two different aspects of the business. Take pubs and restaurants, for example. They've had to shut their doors for a long time, but lots of restaurants have taken to doing takeaways, which is something they maybe didn't do previously. And actually going forwards, now they've realised, oh, we can do takeaways, and it's actually quite easy for us to do takeaways. Well, when they're back open again, they'll be doing even better than what they were previously, because they now know, well, we'll do the business as we did previously, and we've got takeaways on top of it, you know, with Deliveroo and Uber Eats and Just Eat going on as well. That is that's absolutely thriving. So yes, any changes like that, please tell us. And it's great to also see that somebody has been resourceful and thought, well, my business is, you know, what I would normally do, I can't, so what can I do? And that shows something about the person as well. So that's all, again, it's always really helpful. Anything, please tell us, because it helps.
Okay, I was going to talk about something about the most one. We're going to talk about that a little bit later on. So can you give us some, if you were to give your, say, let's go for top 5 tips. Now, anybody could answer this in the whole panel, so I'll come back to you. Top 5 tips for a broker on a self-employed application. What are the top 5 things they must think first before they even ring you? If they're going to ring and speak to a BDM, what do you need in your hand before you even start? The top 5. Who wants to go first?
I don't mind. I'll say the main thing is making sure they've got at least 1 year accounts, ideally 3, but if it is just the 1 year, make sure they have got a projection from a qualified accountant to say that they will do the same, if not better, going forwards. That's the first things first for me.
Phil, what's your top tip?
Yeah, I would say, as I think we've touched on earlier, it's try and upload all the documentation together at the same time, and also clearly label it when uploading it. At the end of the day, you want our underwriters to say yes. So the easiest you can make the job for them, particularly with complex applications, is to present it as concisely and as simple as possible. So yeah, it's making sure you have got all the documentation there, and that will help the process.
Tony, your top tip?
Yeah, we've said it already, but just to reiterate, don't just upload the bank statements. Look at them. Spot the anomaly. If there's something on there, you know, a big credit or a big debit that's not easily identifiable, colour it in, highlight it, make a note of it, tell us what it is, so that we don't have to ask you. That's the key thing.
Yeah, and I think that's really cool here. Guys, if you've got any questions, if we have any questions in from you guys, if you've got any questions for the panel, please do pop them in the chat box. You can ask anything. We'll move on to criteria a little bit later on. So if you've got any questions on other products or anything else to do with Saffron, do please pop a question in the chat box, and we'll try and deliver an answer as soon as we can on here. So going back to affordability, then this is the next thing. So we haven't discussed affordability at all. What are we looking for? Sophie, can you answer this one?
Yeah, in terms of what do you mean, sorry, for affordability?
Affordability. So we haven't got an affordability calculator for self-employed because that's obviously far too complicated. So what we're looking at is a bare minimum.
Okay, I understand. So we don't have a specific affordability calculator for self-employed or contractors, actually. However, you can call us and speak to us about what your specific applicant will need, and then you can take that guidance and pop it into the affordability calculator. It's also listed under the A to Z criteria on our website as well. But generally speaking, and it will depend on the type of self-employed you are. So if you're a sole trader, we'll be looking at net profit. If you're in a partnership, we'll be looking at share of net profit and or salary, if you get that as well. A limited company shareholding director that has anywhere between 20 to 99% shareholding, we'll be looking at salary and dividends for them. And if it's 100% limited company shareholding director, we'd be looking at net profit after tax and salary. And if they do have the 3 years of accounts, if the income has fluctuated, then we'll look at an average across the 3 years and use that figure. If there's been an upward or a downward trend, then we'll actually look to use the latest, which is really helpful because generally most people will go up year on year. And sometimes, you know, previously we were still having to just average out that figure, but we did change policy to try and make things a bit more helpful. So if it has gone up nicely year on year and we can see a good upward trend across those 3 years, we can just look to use the latest year's figure. So that seems to have helped a lot of clients as well, which is great.
Sorry to put you on the spot again, Sophie, but can you talk about the criteria for the contractor mortgage, because we haven't really delved into that yet?
Sure. I mean, for contractors, in terms of the income used, again, it really does depend on the type of contractor. So you can always, and we actually encourage giving us a call and we can run through it with you in a bit more depth about tailored to your specific client and what they're looking at. If they're a day rate contractor, we will normally look to use a day rate times days worked times 48, not 46, which is a bit helpful. We also would look at if they're CIS contractors. Generally, we will actually look to use 6 months pay slips and then just average that out across the year. We also want to see 6 months bank statements as well. The reason we ask for 6 months rather than just 3 is because that should then negate the need for SA 302s, which not all CIS contractors would have. So we do ask for a few more months, but that is to be helpful in total and negate the need for all different bits of documentation that otherwise we would be requesting. And generally just with contractors in general, we're normally looking at the actual contract, if we can get sight of that, and their pay slips, or invoices if they get invoices. So again, yeah, it really does depend on the type of contractor they are, what we would look to use for them. But there's a whole host of things and we can cater to all of them, which is the best.
I think the key, just to jump in on that, two things. Firstly, just quickly on that last point, we don't have any stipulation on the type of contractor it needs to be. Other lenders will limit it to professionals or XYZ. We're not fussed. As long as it's got a contract and it's demonstrable, as long as they've only been doing it, well, minimum of 3 months doing it, we're prepared to look at it. So again, it's that common sense flexibility. Going back to the affordability calculators, we are currently updating our calculator. So a revised calculator, which is actually more generous in terms of what it will spit out at the end, because we've been doing some internal work on that. But we are looking at creating one that will cater for a self-employed individual as well. It's under consideration. So at the moment, we just ask for an income figure. We don't necessarily ask for 3 years income and then using the calculations we use. But that's in progress. So I'm not sure when, but it's this kind of stuff we're looking at. We take a lot of feedback from our brokers, and this is the kind of stuff they've said. So, as quickly as possible, we try to put this stuff into action.
Well, we're talking about calculators on the website. That is quite a USP for Saffron on how many you actually have, and the fact you have them on the intermediary's website already. I didn't realise, since doing this, I didn't realise that those calculators aren't available to many lenders. So I think anybody that hasn't been on the new website yet, it has been updated over the last few months, but it's being updated all the time. So just so you know, guys, in case you don't know, it's saffronforintermediaries.co.uk. If you Google that, it comes up as the top registered address. But go and have a look, have a little poke around, because it is slightly different. And the questions come in. Sorry, I haven't got your name, but what is your view on short-term contracts, Sophie? So obviously you talk about contracts. What short-term contracts? What's the? Yeah.
So just the same really as our general contract. So it can be short-term, it can be long-term. It really does depend. So as Tony mentioned, any type of contractor, if you've got a contract, we're happy to take a view and have a look at what you're doing. What I should mention as well is that standard criteria for contractors is that they have been working within the same industry for at least 2 years, whether that's employed, self-employed, as a contractor, whatever it might well be, as long as they've been working in that industry for 2 years. They only need to have been contracting for at least 3 months. And ideally, we'd like to have enough time left on their contract that's going to get them to mortgage completion. But again, that is something we can sort of maybe take a view on as well. So short term or long term, either way, please do still come to us, because we can still consider.
And what's the point? Sorry, who was that?
Yeah, no, it's just Sophie made a point earlier actually about CIS workers, which I think is good to highlight after working for several sort of lenders. We treat CIS workers as employed effectively, rather than having to rely on SA 302s and treat them self-employed. So again, there's not an abundance of lenders out there in the market. So a message from me is, if you've got a CIS worker, we should be one of your go-to lenders, because they're probably likely to be able to borrow more from ourselves than a lender will treat them as self-employed.
That's a really good point. Thanks, Phil. Another question. Sorry, I don't have your names because of the link issue, but would you consider applications from people without indefinite leave to remain in the UK?
I'm happy to take that one as well. So essentially, no, unfortunately not. With for foreign nationals, they will always need to have indefinite leave to remain for us to consider lending to them. I will add on to that as well, which might be helpful. With EU nationals, though, whereas before Brexit, we could potentially consider with pre-settled status, we can lend to EU nationals now with settled status. And that's post-Brexit, that change has come in. So yeah, can still consider them, but they need to have the settled status now. And foreign nationals, they will need the indefinite leave to remain.
Thanks for that. Okay, guys, we're halfway through, and we're getting very few questions. So if you've got any additional questions for us, please feel free to throw them at us. So we're going to probably move on away from self-employed and contractors. If you've got these questions for these two specific types of mortgages, two specific types of employment, then please get those questions in as quickly as we can. How have applications been affected for self-employed and contractor over the pandemic, Tony? Have you seen a drop, or has it remained consistent? Because the market's pretty buoyant, isn't it?
Yeah, I mean, our activity level is growing, which is good. You know, I think it's because obviously we're doing more awareness, things like this webinar, and you know, other areas. I said I've grown my BDM team from 2 to 7, so there's a lot more mouths to talk about what we do. So the impact for us is that we're seeing, you know, the awareness of what we can do differently, of how we can, you know, how we can help and support those complex cases. So for us, it's you know, it's good. I think, you know, all good. Generally, the market is buoyant, and I think that there's a challenge coming ahead now. We've got the end of the tax year out the way, so you know we've got a lot of the true impact of Brexit, of the true impact of the pandemic on the self-employed is going to start showing in their accounts and in their SA 302s. So I think, you know, for us again as a lender that's prepared to listen and take a view, this is where I believe we can really support those self-employed that have not had an easy run through. And that doesn't mean we'll do every case, but we're prepared to listen to the, you know, to the rationale in every case. So I think that's the kind of cliff edge that a lot of people are facing.
I think everyone's been sort of hoping to take advantage of the SDLT holiday, but actually then looking, as you were saying, Tony, it's been extended, but we're now in a new year, the SA 302s come out, and it's a different ballgame for them now, isn't it? Sorry, Phil, I interrupted you.
Yeah, no, I mean, I think my observation coming into society is that the Saffron have continued to support the self-employed community as well, and not changed our policy to make it harder for them. I know a lot of lenders very quickly, reined in the policy. That's something we didn't do. So, you know, I think the willingness to support the self community is there, and same with furloughed applicants as well. Government grants, they're not automatic no's. You know, we'll look at each case individually. I know we say that a lot, but we genuinely do. And for the right ones, we're saying yes. So I think that's why it's so important for the broker community to talk to us with their more quirky, complex cases.
Well, I think that's a hell of a point, isn't it?
And I think actually, Jay, I was just going to add, we have product development underway that's going to support the self-employed and contractor markets even further in terms of not as much deposit to find. We're not quite there, ready to launch them yet, but those are on the horizon.
I think that's, you know, if we were to sing our praises as a society, I think there's one thing we can say is that we are constantly in review and constantly looking at the market and trying to find better ways of doing things. I think, you know, we can take some credit for that. And I think, you know, that's been the mentality of everybody in the year we've been doing this. We've stuck with that same message. And I think, you know, as new products come out, we try and get them to the brokers as quickly as we can, and we try and market them as quickly as we can so you know they exist. But always worth popping on the website because there's constant updates on there. So if you're not reliant on the trade news or our email outs, just pop to the website every couple of weeks just to see if anything's changed, because it's changing a lot. Okay, we've got some questions from Ramesh. Would Saffron consider applicants on a fixed term contract? For example, a client who has historically, not again, put my teeth in, on a day rate and have now moved to a PAYE?
Yes.
Go on, Soph, go for it.
Yes, in short, yes, we absolutely would. We also, which can be helpful as well, if they're a fixed term contractor, but they're actually on an employed salaried basis, we can potentially consider them on the standard residential range rather than our specific contractor range, which can be helpful because that does provide a bit of a higher loan to value on there as well. So if they are looking for maybe a slightly higher loan to value and they're employed salaried, then we've got that option for them as well, which just provides a little bit more variety to help them out. But yes, absolutely fixed term contractors too.
Well, just to stick with Ramesh for a minute, to the second question, what would be a considerable, what would be a sort of considered gap between contracts? So an acceptable length of gap between contracts for a contractor.
Do you want to go?
I've been really impressed with this because of in my world, I was expecting say anything more than a 3-month gap in the last couple of years. We'd probably throw it out. But we had a case agreed recently that they'd actually had a 7-month gap, which felt quite large to me, as has been around a bit and worked for a few of the lenders. But we agreed the case. It did have some good other circumstances around it in terms of loan to value, what they did, and we could understand the rationale and the reason why. But it told the right story, using that theme and phrase again, and it made sense. We referred the inquiry to our head of underwriting, and the case was agreed. So there's nothing written in stone in our policy, but it is a very pragmatic approach. Is if there's a good rationale for the gap, we will say yes.
It's all about the story. We keep saying it, but it's all about telling the story.
Yeah, it is.
Fill in the gap. Let us know what's going on, and then we can go from there. Okay, this question pops up a hell of a lot. Sorry, you didn't put your name through there, so I can't name you. So we're talking about the consideration of clients with CCJs, defaults, and missed payments. Will they be considered or automatically thrown out?
It can be considered depending on how much the CCJs and defaults were for, how long ago they were settled. Missed payments wise, normally we don't like to see any more than around 2 within the last 2 years. But again, we might be able to take a view on that depending on the case. In terms of CCJs and defaults, they will always need to be satisfied. Depending on how much they are for, that will be the determining factor as to how long they need to be satisfied for. So again, they're always good to come to us and chat through with us, and we'll go through it with you and sort of say, yeah, that fits within, or actually, do you know what, that's going to be a bit too much for us at this stage, needs to be satisfied for a bit longer. So give us a call, we'll go through that with you.
It's that case-by-case message again, isn't it? Yeah, that's absolutely fine. Okay, so no name. 2 questions are exactly the same here, so I'll ask them. One, would you accept limited company director with retained profits?
Not retained profits as such, no. However, if they're 100% limited company director, or if there's 2 applicants who are each 50-50 and they're both going on to mortgage, so collectively the case as a whole has got 100% shareholding directing of that company, then we would look to use net profit after tax and salary.
Okay, sorry, I haven't got your name to respond to that. Phil, were you going to say something then? Sorry, you didn't know you were about to.
No, Sophie answered it perfectly.
Okay. So I think the message coming out of this is 100%. It's case by case, but give us the story, isn't it? It's let us know. Again, with the missed payments, it may have been something that was uncontrollable, like ill health or something like that. So it's very much tell us the story, give us as much information as you can, and just be honest about it. And I think the important thing to come from this, and guys, feel free to disagree with me, is for the broker to ask the right questions of the applicant and ask the questions before they come to you. So they've got as much as they can, and that will just speed up the process.
Yeah, absolutely. If you can find out as much as you possibly can from your client, the more you know about them, the more you are then armed to come to us with, and we can give you our thoughts on that as well. And often they end up being very similar to what the brokers thought the case is going to be as well, because we all work in the industry, we all know how things work, and like Phil said earlier, if it makes sense to you as the broker, it's very much likely to make sense to us, and therefore we will do what we can to help your client.
I think it's head in the mind of a head in mind of you guys, isn't it? And just saying, okay, what do I think I need to explain here? What do I need to know? And let's go harp on about in the portal. We'll talk about registration a little bit later on, but on the portal, that notes section is your go-to. Get everything in there. Get everything you can in there. Don't be afraid of putting too much in, because there's never too much information, right?
Absolutely.
Correct.
Exactly. The other thing I would say as well is around what can a broker do, when they've got a case ready, and that is, which they all do, which is use the criteria sourcing systems to ascertain who will do what. Now, just to say, we monitor that. Our criteria is up to date on all known sites. So every bit of criteria site that we can be on, we are on. And, Sophie and the team make sure that that's always up to date as well. So you can rely on that detail even before ringing us. So I just thought I'd add that point there.
All right. We touched on something earlier, and it is stepping a little bit away from the self-employed and contractor mortgages, but we briefly mentioned furlough. So we'll take a bit of a random question out there as we go into the criteria clinic on furlough, because it comes up every time. How is furlough likely to affect applicants? We've now had some people that have been on furlough for a year. Maybe they've been on part-time furlough or flexi furlough. I mean, there's loads of different varieties of furlough. How much is that going to affect our application across the board? So looking at every product we have, how is that likely to affect them? I don't know who wants to take this.
I can take that one. So it really does depend on a case-by-case basis, and how much it affects things. I mean, it's no secret that it's not ideal for somebody to have been on furlough, but it's much better to have been on furlough than to have been made redundant. So, it's not worst case scenario. And so many people have been on furlough at some point or affected somehow by this pandemic. We appreciate that. And again, we'll try our best to help them. So it really does depend on the factors within the case as a whole. So say if there's a couple and one of them has been on furlough for a while, but the other one has had their income remain steady throughout, and actually they're the main income earner, and the second applicant is more of a top up to the income, that's going to be looked on perhaps a little bit more favourably than, say, two applicants who've both been on furlough, so they've both been affected. If it's been furloughed for maybe just a month or two, that's obviously a lot better than somebody who's been furloughed for maybe 6 months plus. Return to work letters from employers as confirmation, they are very helpful as well, because if somebody's on furlough, I mean, at the moment we know that that's due to end on September at the latest. September's still quite a way off. So if we can get something from the employer to confirm that they will be going back to work no later than, even if it is 3 months' time, at least we know they are going to take them back on, and they're not going to just let them go when it comes to the end of furlough. So any notes, any evidence, any supporting documents that you can provide to help us paint that picture for your case, then let us know, and we'll be able to give you our best guide as to whether we think, yeah, do you know what, that's got legs to it, or actually at the moment this is too much, before you then go ahead to decision principle and beyond. We as BDMs will give you our honest opinion on that, and then even when it gets to decision principle stage, again, you can add your notes on, and that can be reviewed by an underwriter, and they can try and give their thoughts as best as possible before going through to full mortgage application and paying fees, etc.
You just touched on something. I've forgotten to share something, but you ended that beautifully and talk about underwriters. We've got some top tips. So I'm just, as we speak, I'm just sharing a document with all the viewers. It's some top tips that has been sent to me by the BDM team, some sort of a tick box exercise when you submit an application. So that's just been sent directly to you. So if you look in the chat box, you should be able to download that straight to your computers. Okay, so let's go back to the criteria clinic and some regular conversation we've had and questions we've had in. Tony, the green retro mortgage, we've heard a lot about this in the press. I've seen it a lot, and I put it there, but there's been a lot in the press about the green mortgage. Can you just explain what it is? I don't know, Tony, if you want to take or anybody else, but just explain what the green mortgage is all about. Because there's been a lot.
Yeah, it's part of our residential range, and it's there to encourage homeowners that want to improve the efficiency of their house and see a benefit for doing it. So we the guys can give you more detail on the rate, but we have a product with a rate, and if you can demonstrate that you've improved it to an E or greater, efficiency rating will give you a 10% reduction, 10 basis points, 0.1% reduction in your interest. So not 10%. That's not right. So I'll get shot for saying that. Yeah, 10 basis points reduction in your monthly interest.
I think the thing I like the most about it is when I first saw it, I thought it was just on people who are just bought your home over, but it can be on any conversion, it can be on anything, couldn't it? Because when you buy an old house, it generally is a bit of a leaker, isn't it? You know, they're not sealed, they're not energy efficient anyway, and it actually doesn't take much to get to E and above. It can be the simplest of things. So you see what's popular. So that's really good. Also on the green mortgage, is it beneficial for somebody who, I mean, it could be a first-time buyer, couldn't it? Or does it not really suit a first-time buyer, Sophie?
Yeah, I mean, it can be a first-time buyer. It's not restrictive. So if they want to take on a property that perhaps does need a little bit of work, like you say, they can probably just naturally what they would do anyway in order to make it more comfortable for them to live in. As you say, that's going to help improve the EPC rating regardless. So yeah, even first-time buyers or home movers even, yeah, it's not restrictive to that.
I only asked that with the first-time buyers because young people are so much more focused than us oldies on the environment. And I know for first-time buyers coming into the market, they can be looking at the house they're moving into, but people don't necessarily want to move into a prefabricated house. They might be like, oh, actually, I quite like the look of that small cottage that was built in the 1800s, and I want to move in that. And actually look at it and go, well, actually, it's sucking out, you know, so much energy from the system. So it's very flexible, and I'm really pleased to see that on there. And I know there's been a lot of credit to Saffron for that and the way it's built. So really interesting and really good in a short time to reduce or improve your EPC, should I say. Okay, one other thing the next webinar we're going to be doing, which is next month, we'll announce a bit more on that later, is around self-build. So I want to kind of tease a little bit, Tony. We have talked about it before, haven't we? Tease a little bit on what self-build actually means and what it means for a broker. So what falls under self-build? It's obviously we know it's not a business.
No, so I think the distinction is, and I think from the last webinar we did with Peter Owen, he made a really straightforward distinction. If you're buying a house, if you're building a house to live in, it's self-build. If you're building a house to sell, it's development. So we're interested in both. My team's more focused on the self-build, you're buying it to live in. Peter's team will help build small SME builders, build houses to sell. So that's the distinction.
Very clear distinction, like that. And with regards to self-build, it can be, I mean, you're quite flexible compared to most lenders, aren't you, on the types of building it could be, so?
I think so. I mean, I've worked for a number of lenders that have participated in that sector. And I think the other thing that strikes out to me is the array of solutions. So we'll do a traditional plot of land and build a property. We'll do your barn conversions. We'll do knockdown and rebuilds as well. But I think the other big one is actually the renovations. I've seen so many inquiries here where clients are buying a property on the market and it's not readily habitable, so it might not have a kitchen in. So with a high street lender, there's a good chance it will be zero valued or not suitable for mortgage purposes.
Mm-hmm.
Our self-build products are ERC free, so we're a great solution as an alternative to bridging, which can be very, very expensive. And all you need to do is complete a self-build supplementary questionnaire, submit that with the decision in principle, and we can look at renovation scenarios for you. And it can be a lot cheaper than using a bridging option, which is traditionally fulfilling those areas of the market. So I mean that was my big takeout as a newbie at the Saffron is how much we can do of that. And also we've seen a lot of conversions as well. So it might have been 2 apartments being converted back to a single dwelling. That seems to be popular in London from some of the calls I've been taking as well. So again, that will work on our self-build and renovation products. So, you know, the message is, if you get any of those, rather than thinking, oh, that's a bit tricky, I might need to refer that to a specialist packager to get it placed, give us a call and we'll talk it through.
Well,
yeah, just to add to that as well, it is extremely flexible. Sorry, Jay. And as with a lot of other lenders, you don't need to come to us via Build Loan or Build Store. You can come to us directly via your normal submission route. So as long as they're a key partner of ours, which are listed on our website, and there's a lot of them, you can come to us directly. You don't need to go through Build Loan or Build Store if you didn't want to, which is a USP as well.
John, one of the reasons I brought this up is because I was just reading again. It's been news for the last sort of 6 months. So with the deterioration of the high streets, a lot of the Debenhams, a lot of the John Lewis's have been converted into flats, and actually big ones. But they're actually then looking at the smaller shops, and then looking at it's individuals that are coming in, as you're saying, converting from commercial use. So the council's already changed the use of the building from commercial to residential, and then obviously they're coming in. It's a big renovation, so you guys could potentially look at those people as well, couldn't you?
I would say we can look at those, but one of the things is the in that scenario of like a high street renovation, it's what's around it. You know, we've got to look at the overall you know, saleability of that property. So if it's in a commercial run and it's next to fast food or a pub or something like that, it is probably unlikely that we would want to look at it, but it's worth a call. Again, you know, we don't have any hard and fast rules on this. It's case by case.
100%. And I think that's vitally important, because that's a lot of the questions we get with regards to expat and other mortgages is what if they wanted to have a flat over a restaurant or over a cafe or etc. So obviously we need to bear that in mind. As I've just mentioned expat, I will come on to the question in a second. But as I mentioned expat, I just want to ask a couple of questions and just bring this up. So I know it's a brilliant product and it's one of Saffron's hero products, I think, as you know, as a unique product. It's gone really well. Obviously, what's the news with regards to borrowing or somebody borrowing from the EEA at the moment? So obviously, that's since Brexit, that's become a no-go. So you literally will do anywhere in the world other than the European Economic Area, correct?
Yeah.
Yes, providing it hasn't, providing it's a country that doesn't have any ongoing conflict or political tension, and it's not in the EEA, then yes, we can consider that.
Tony, what's the news with the EEA side? Is there something that we potentially be looking at later in the year to see how we go about this? Is it a policy change? Is it a government change? Is it something that really needs to be looked into?
Yeah, I think it's. I mean, we're constantly reviewing it. It's a wider piece, but it's all about the I can't say the word. I'll shut it down. It's all around the legislation. With it, I was going to say legislative, but God, that's dreadful, isn't it? It's all about how each country works. I'll say it that way, and the legal systems in terms of how we could operate comfortably, and we're just not there yet. And I think it's something that the government is obviously looking into as well. It's spotted as a bit of a gap that's been missed as a result of Brexit.
But there's a outside the EEA, though, does it? So
no, we get an awful lot. Yeah, we get an awful lot of business from expats in Australia, in South Africa, in the States, and I've seen a tick up of those in the Middle East, sort of Dubai and the Emirates. We see a lot of cases from there.
Okay, we've got 10 minutes left, guys. I have got one question in, and then we're going to go on to talking about the future a little bit. But the question is, do you accept one-day remortgage to cover an exit from a bridge?
We won't allow day one remortgages. The only time we will allow day one remortgages is when it's a property that has gone through probate, or potentially on a self-build proposition. That's it, I'm afraid.
Yeah, I suppose turning that round is for things like renovation properties. I suppose we'll position ourselves as a go-to lender, as an alternative to the bridge. So I think that's the message, turning that round a bit.
But what I would say with that is, Sophie's correct in that's what our policy says, but our policy also has latitude for consideration for other reasons. Okay, so whilst I would suggest that those other reasons are limited and it's unlikely that we might support it, it's still worth a phone call.
So guys, we've got 10 minutes left. I will accept a couple more questions. So if you've got any questions for us, pop it in the chat box and we'll get to it as soon as we can. That's across the board. So if you've got any questions about any of Saffron's products or anything regarding Saffron, please just pop it in the chat box and we'll answer you. So Tony, Phil, put your fingers in your ears. Tony, we announced last month that you had some new additions to the team. Do you want to just explain what you've been doing to invest in the team, and maybe we'll talk about Phil?
Yeah, well, you know, we do regular feedback from our brokers. Okay, so we do 6 monthly surveys, which is a broader basket, but we've recently launched our real-time survey as well. So every time we issue an offer, the broker that submitted that case is now sent a survey, because we're very interested to feel and hear about their experience of dealing with us right then. You know, the 6 months once are great, but you know the problem with 6 months ago is your memory fades and reality kind of can get in the way of unreality. So we're doing that as well. But a lot of our feedback said we want to hear more from you. Okay, we want to hear more from your BDMs. We want more support. And you know, coming in here, I had a small team. We had a BDM team of 2.5. Okay, which you know when we're geographically we can do the whole of England and Wales. You can imagine how challenging that is with 2.5 staff. So we had to grow the team, you know, because it's the right thing to do. So I'm delighted to say that team's now up to 7, and we'll be growing further. And obviously Phil is one of those new additions. So delighted to get Phil on board. You know, I have worked with Phil previously, so it was great that he wanted to work with me again. I hadn't scared him off too much.
I think why you want to do that, Phil.
Yeah, I know. Nothing to do with the money, but you know, Phil was excited by the opportunity here at Saffron, because we are developed. You know, we really are crystallised what we want to do, and it's about how we get there. So Phil's the first there. We've also got Simon O'Donnell that's joined us as a BDM in the South. Simon actually is an internal recruit who's kind of on our talent radar and is somebody that we need to look after and develop. And his time has been spent in branches, so he's very experienced with Saffron, and mortgages just gives him a superb opportunity to develop his skills. And he's a really great guy, and I'm hoping he'll be on an SFI live soon. We've also brought on Raji, who is a business development assistant. She joined us from an internal team again. She wanted to get more involved with intermediary. And then we also recruited Lindsay Smith as well as another BDA who joined us from outside the industry, but she's shown an amazing ability to grasp and learn, and is helping brokers all the time. She manages our tech support line. So if ever brokers ever ring about, I don't know what I've done with my case on the system, Lindsay's your go-to girl for that, and she's been amazing with that. So we're kind of, this is the start. You know, we've got plans to grow the team further, because you know, as the world opens up and we can actually start to go and see people physically, not just virtually, we want to make sure that we are, you know, bringing the Saffron proposition to life. You know, and it is something that is great that Phil's talked today about case studies and bringing the story, and both of them have, about what we do isn't easy to do on a piece of paper. You need to talk about it, you need to understand it, and to do that I need a big enough team to do that. So delighted to have such a quality team, and that will grow over the coming weeks, months and years.
No, something you just said there that's really important. Guys that are watching, if you're not currently registered with Saffron, so you're not getting regular updates via email and haven't registered on the site, if you go onto the Saffron for Intermediaries website, at the very top right corner, you'll see a register link. If you register there, register from the portal, so you can submit applications really easily, I presume, after that. But it will also put you onto a mailing list to be kept updated with product changes, new products, and exciting news and things that are happening in the society. So Saffron for Intermediaries.co.uk, and then register in the top right corner. Get your details in there, and that just means the BDM team have got a way to contact you and to let you know what's happening. Right, we're coming close to the end now, guys, so I think it's time to give out some finer details. So Sophie, I'm throwing it over to you. Can you give out the phone number and the generic BDM address for Saffron, please?
Yeah, absolutely. You can get us on 01799 582 925 or BDM saffron.inquiries@saffron.co.uk.
Lovely. Well, that's going to be it for us today. This is going to be available on demand, so you don't have to rely on what you've heard today. You can watch it on our YouTube channel from Monday. So I'll be live on there from Monday. So do feel free to go in there. All the previous episodes of SFI Live are all on there as well on various different subjects. So get yourself on there, have a look, see if there's something you're interested in and whether it sparks your attention. We're back on Wednesdays from next time. So Wednesday the 17th of May is going to be our self-build, and we have, I can't announce who it is yet, but we have got a special guest joining Holly and Tony and I next month to give us a bit of an insight into the industry. So look out for that. The link for that will be emailed out today and will be put on social media channels today. So get yourself registered. You'll probably get an email from me at some point in the next couple of weeks to remind you as well. So wasn't all that bad, was it, Sophie, Phil?
Very good.
Well done, your first one, guys. Very good to see you. No doubt you'll see these guys again as time goes on. We're going to jig it about and change the panel on a regular basis. So thank you, Sophie. Thanks, Phil. Thanks, Tony. Thanks, everyone, for watching. Any questions, email address. Good, guys.
Take care. Bye, everybody. Bye.
Bye.